Good afternoon, good morning, or good evening, wherever you are. This is the 1st May 2015 India Market Review, and this one is going to be a solo. So there is nobody else on the session today. It just got slotted at short notice. And what we are discussing is how the Indian markets have behaved over the last 1 week and what we can expect them to be moving forward. So you should be able to see the Nifty on your screen, and right, yeah, right. So the first month of this new fiscal year is over, and well, the start of the new financial year has really definitely not been good as far as the markets are concerned. Overall, we've had um, not so good corporate results, right? And I think apart from that, the global markets have been a bit weak. And third, of course, we've had the Nepal earthquake, but that really does not matter financially to India. All right, so not sure if I'm missing anything else, but if there is, then get back to me later. Right, so on the screen you should be seeing the Nifty, and I think the one of the most outstanding things on the Nifty right now, as I messaged in the WhatsApp on the WhatsApp group about I think a week back, is possibly this head and shoulder, which has most definitely broken down. As a matter of fact, when we messaged it on Monday, that time itself it had broken down. There's also possibly a head and shoulder inside a head and shoulder here. Okay, so not common to see this sort of a pattern, but yep, there it is. And if we look at the measuring implication of this, then it would be 899, so I mean just about 9,000 to, let's say, there, which is 8450, so 550 points. And from this time, from where it broke down here, we're talking about at least 8,000 on the Nifty, right? So that's actually almost been reached. We are not so far from that. 8181. If you look at the chart, technically an 8,000 psychological mark, but most probably here is somewhere where there is some better support resistance, so that will be 7,800. And of course last week was Thursday was expiry, so FNO expiry, right, on Thursday, so that I think could have caused a little bit of a limitation on how far down we were going. I think the Nifty option pain was at 8.2 or 8.3, and as of now on the weekly chart we are at that support level of 8,150 or thereabouts, and could easily fall to 7,840 here. And then we have the 7,450, 7,500 levels here that you can look forward to next. So I think in the short term, this is where we are, and in the coming week, oh yeah, one more coming month rather. Um, One more thing I remembered is the shortfall expected in the monsoon. Alright, and already we've had, at least in Bangalore, some very unseasonal rains. So all in all, poor corporate results, poor rains, weak global cues. The Greek problem just doesn't go away. So you have this whole situation sitting here, and we need to watch out for that. So I think as of now, all the way down to 7450, and I keep saying that, one of my things is that I think ultimately old important supports or resistance need to be tested, and the triple top breakout of 6300 has not been tested. Looks like a long shot at this point, I know, talking almost about a 2000 point fall, but that will be about 25% of a fall from where we are right now, and that's, well, not in my opinion, it's happened before. It's not a really a deal breaker as such. So, and fundamentally we are at around 21, 22 on the P ratios for the Nifty, and that should take a while to correct. The only way is either the price comes down or the EPS goes up, and the EPS going up at least this quarter is most decidedly not going to happen, and we'll have to look at a longer time frame. So in the shorter term, prices could definitely come down. There is in today's news the subsidy burden of oil and gas companies is gone. Then the government is going to take on the entire subsidy burden on itself. So that is something that could be positive in the weeks ahead, especially for companies like Oil India and ONGC, and also to some extent for the oil marketing companies. All right, so that's the overall view of the market plus the Nifty view technically. So head and shoulder clearly breaking down, no sign of optimism at this point in my opinion. And also just to point out, this head and shoulder took about 4 months to form, and the rally, uh, depending on from where you want to count it, could be from 7,800 levels or even from the 6,300 levels. So my view is clearly bearish. Should get out of the market, even short it in my opinion. uh, there will of course be stock specific uh, uh, issues where things might, you might want to be long, but I think it's clearly a short now. And since the expiry is over, today Friday is a holiday, Monday I would expect the next week we should see continuation of the selling pressure. And for the short, of course, the neckline is your ultimate stop loss level. So above 8500 would be your stop loss. It's a pretty steep one because we're already at 8200, but if you are gunning for 7.4 or maybe even lower, then that's definitely a reasonable stop loss. You could go of course down with the futures, or you want a tighter stop loss, you could look at 8320, 8340, and maybe just buying the 8000 put or even the 8100 put for May might just be a good idea. And those who want to have less risk, well, you can always look at out of the money options of, let us say, 7700, 7600. And if a crack comes, and you can see, when a crack comes in just, what, 1 2 3 weeks, you've gone from 88 to 82, so 600 points, 8% gone. So could easily happen again. Another 10% fall is 800 points. So watch out. All right. So looking at then the individual sector indices. So we've got the bank Nifty here. Let me just go back to the Nifty. Sorry. And if you look at the Nifty, one of the things is that it's at the 200-day moving average at around 8,180, 8,200. And once that breaks, that's relatively important support level plus this support line here, then all the way to 7.5, 7.6, 7.7 is a very distinct possibility, right? So that's one more thing to keep note of. And of course, all the shorter term and longer term moving averages except the 200-day are all facing down and quite sharply down in my opinion. So any bounce should be used for shorting. Bounce could happen till about 84, 8450. Very difficult at this point for the market to go above 8500. Right. So looking at the bank nifty, some of the banking stocks have declared results, of course, nothing very spectacular. You have, in my opinion, a downtrend line here, clear double bottom, double top, sorry, on the bank nifty, and this is also in a very tight support zone at around 17,500 to 18,000. You could look at a sort of multiple a complex head and shoulder top. I would say this is the left shoulder, these are two heads, and this would be the right shoulder, and we are possibly just at the neckline as we speak at around 18,000, and you're talking about almost a 2,000 point measuring implication, so actually a little bit more, but anyhow, so that will take us, so if it breaks the lows of uh, um, about 4 or 5 days back, 24, 28, and if it breaks 17,500, then I think going down to 16,000 is really not a big deal, and you may want to look at how you want to execute that trade. As a matter of fact, the bounce last 3 days is a perfect shorting opportunity in my opinion. Um, there is some amount of strength happening in the indicators, but wouldn't be surprised to see things actually become worse. As you can see in the MACD, RSI, stochastics, all on weekly charts, there's really absolutely no strength at all. So some intraday or short-term strength could occur, but I think overall the message is down, and you could, even if you get a bounce about 18,600, one should think about going short on that. So initial target is around 16,000, and a short now would have a nice stop loss around 18,800. So 500 point stop loss, almost 2,500 point drop. This is not going to happen in a day or two. It could take a couple of weeks, maybe a month. So keep that time frame in mind. So BSC power, no, nothing. It's another head and shoulder top could be mentioned here. Left shoulder, big head, right shoulder, and then there's a head and shoulder inside this head. But given that there's no pre-existing big rally, wouldn't pay too much attention to that at this point. Uh, but just for academic purposes, this is, I suppose, the level to or the neckline to watch out for, and it'll be interesting to see what happens once that breaks. There's some news about I think Tata or Reliance Power. Sorry, Reliance Power. Sorry, exiting some UMPP project. So we'll have to see how that pans out. Okay. All right. So this is the BSC Power Index. Then we have Realty. Been a small bounce there, but there's been a big fall from 1800 to 1550 to lots and lots of red candles, as you can see. So really no happy news there at all. And even though it's come out of a long-term multi-year downtrend, um, looks like it could go a little bit lower before it becomes a good buy. 1400 on the realty index is a place to really watch out for, and then we can review if there's anything buying to have to that could be done there. Okay, and here trying to see, there's really no trend line as such. This is sort of tentative support line, I would say, but really nothing more than that. Okay. Hmm. The Sharia index, we normally don't look at it at all, but this was actually showing clear weakness way before the other ones. Left shoulder, head, right shoulder, and clearly you had a breakdown there. And on Friday we had a nice pullback, or rather Thursday, with an oh, what happened to this? This is not being updated. I'm sorry. I take this back. I should remove it from my charts. Okay, CNXIT. So as we know, IT companies haven't really declared great results, and it's fallen quite rapidly from 12.8 to 10.9. That's almost 2,000 points, 10%. And I think you should review the IMR of about 4 to 6 weeks back when we talked about a topping formation, and you know it's not a divergence, but the weakness that had occurred, MACD negative crossover, and that crossover really not closing down. Subsequently, moving averages getting broken one by one. So any, I think, up move on IT should be again used to short, even though the rupee actually has depreciated a bit now, 63 plus. But just keeping that in mind, you should look at any bounce at 11.4, 11.5 perhaps, though it looks very unlikely. And the first target will be 10,700, and after that 10,400 on the CNX IT. Okay, the mid cap index also, just more or less just has come down. Small bounce last week, but again, a bigger fall could happen. This level is now resistance 12,760. It's about 100 points above where we are right now, and right. So this has become a resistance, and then we should see it come down to 12,000 later. Nifty Junior. So the mid caps were providing some strength earlier, but no sign of that at all right now. And tentative bounce Wednesday, Thursday. The 100-day moving average is acting as, I would say, a resistance, and a break below could easily take it to 18,000. And very strong resistance are 19.5, 19.7. Not sure exactly what happened on 20th April. The good to investigate was going up very nicely, rally after rally, and then one bad day took away 1, 2, 3, 4 days of any move, and now we are back to 8,300. Right? And okay, and been range bound for a good 6 months. Interesting to see what happens after this. This news about subsidy came out, I think, today. So it might take a while for the um, or we'll probably see maybe a bounce on Monday on the oil sectors stocks, and this sector should react to that news. Then we have CNX Infra. Absolutely no sign of strength on that at all. Uh, that's where some support definitely is, and once that goes, then we could see a much lower level. However, This could also be a strong consolidation that's going on, a sort of bowl here, very unusual. We don't have freehand drawing in uh, Metastock, but if I could, I would have put just track my cursor. This is your bowl, and the resistance to watch out for would be there. And once that gets broken out on the next up move, then this could be a big move up. Having said that, as of now, things are looking really bad. Uh, wouldn't look at going long on it. And once 3-1 breaks, then I think 2950 is a distinct opportunity. Okay. Pharma, once the leader of the pack, and about since a month back, we've been cautioning against any fresh pharma longs. So clearly, there's an excellent example of uh, divergence trap. Okay, there was a divergence, market didn't move much. Suddenly, market moved up, and one would have been forgiven to say that there is no divergence there, or it was false, or whatever. And after going up and staying there for a week, we've come down from 13.5 to 12,000. So that's not a small fall at all. There's a gap also here, which we should mark out for future reference. All right, and once it takes support around 11,750, then we could see much higher levels. But 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 given this test, if this breaks, then 11,000, and then after 11,000, we'd really like to review how further down this market could go. But we'll put 11,000 and 11,500 there for 10,500 there for the short-term target. But yeah, I would definitely be shorting it. Then I stop loss around 12,365. You already saw weakness in the Bank Nifty, and we saw a big double top there and a head and shoulder formation. And here we are looking at weakness again of the bounce here, and if this breaks, then definitely much lower levels to be expected. The PSU banks, late March, early April, there's this big rally. We're very um, hopeful that but it was in retrospect, of course, the private sector banks didn't participate in that much, and it's perhaps it was a sign of no a clue rather, not a sign of a bounce rather than actual uptrend. And now we are going down further. Looks like Thursday, Friday have been very weak for the PSU banks, and at in the short term, 3,300 can definitely be expected. PSC auto. So you can see if I now take this back, right? So that's like a very unusual but very broad and very valid 4-5 month head and shoulder top, I would say, or you could call it a rounding top if you don't like that, or unusually left shoulder, very big head, which did not break down the neckline. There's a right shoulder which has broken down. There's been a pullback that has taken the market after the breakdown up there, and now it is heading back down. If you look at the measuring implication from say 20,000 to 18,500, 1,500 points, so we're talking about 17,000, right? So quite easily happening. I would say 17,000 is right where our support level is, thereabouts, and CNX Auto would have been a beautiful shot. The timing is great. It would have been a nice stop loss somewhere above that, or above 19,000, and just hold on, or just if one could buy the 18,500 put, and that would have been, you know, um, a good risk reward trade off. Then we have consumer durables, right? Since we don't see many in the indices that we see, we'll put a pass to this. But you can see that that's also one sector which is not as weak as the others, but is definitely going sideways and showing some very unhealthy big red candles. Capital goods. So after breaking out of a multi-year level from 2010, we had a tentative move out of that, but right now looks like that's gone. And as a matter of fact, trend line being broken, we could also start looking for a head and shoulder pattern there, and in my opinion that would be it, right? Which has broken down, but then the advance would be a very small one for about 1,000 points, and from there 16,000 I think already restalled, not really, but we're not very far from that. The low is 16,340, and we now have this level here, downtrend. So anyhow, big left shoulder, big head, big right shoulder, and oh yeah, here is the trend line that we spoke about. All right, okay, so that's another head and shoulder which we can expect. Hi Bobby. All right, then we have the FMCG index, and that's one big fall that's going on, and it's been accelerating. We've got these four big red candles there, and it's come back to a very important support level. Also broken the 200-day moving average there, and looks like it's going to get worse before it gets better. As you know, one of the um, things that are good for FMCG definitely is the monsoon, and if the monsoon outlook is not good, then this is also not favorable. So we've got FMCG breaking down, and well, now that we saw so many head and shoulders, there's one here, massive one, big left shoulder. We could have, this was a left shoulder, head, right shoulder. That itself did not break out, but this whole thing, November, December last year, left shoulder, 1, 2, 3 months head, and 1 month right shoulder. This is huge, and we are just at the, just at the breakdown levels. So BSC Auto, BSC FMCG, excellent head and shoulder top patterns. All right. I wish these indices were traded, but they are not. So you'll have to find a indirect way of dealing with them. Just look at the big weightages in those sectors and then go short on that. Right. Yeah. Healthcare. I don't think there's too much there to look at or worry about. So give it a pass. Just like pharma almost, and this bound should be used for shorting, and once 15,200 breaks, which I think it will, and you can have a nice stop loss here at about 16,500. It could go much lower. Then BSC metal, right? So there was some hope in the metal index earlier, but really absolutely not there anymore. And well, I guess it's going to just go down a lot more. This was the downtrend line we had hoped to break out, but things have just really not worked out after that. The breakdown from this 9,800 level is important. It's significant. Aha, and we've just got an MACD crossover here, so that's not a good sign at all. Further weakness can be expected, and that MACD is also just gotten out of the negative and it's a bit in the positive, but then looks like it's most definitely crossing over into the negative again. So longer term bearishness is still very much there in the markets, and this has been one of the worst sectors in terms of performance. 2000, um, this level is not very far off from the 2008 bottom. Of course, it's 100% higher, but then way lower by 50% from the peak of 2007, 2008. Long way to go if you'll ever see those highs again. So that is the metal index. Then we have the mid caps, which we discussed already. Uh, PSUs, nothing to add. Small caps also. So this is, if you were a technical trader on this, you'd have really had a tough time. There was a clear ascending uh, triangle. It broke down, didn't really meet the targets, but not very far from that anyhow. But did it take off and break, took support on the 200-day moving average, and then it swiftly went back and made a new life high in pretty dramatic form because, just 2 weeks of green, very strong green candles, Marubozus. And the next 2 weeks are like the exact opposite. When it had gone up here about 3 weeks back, one would be forgiven for thinking that uh, you know, new life high being made and all that, false breakdown from an ascending triangle, and we got much higher to go. But clearly, things are now looking very different, and this is a good lesson to know in terms of how markets can change, and they can change actually much faster and drop much faster also. But anyhow, a good lesson, I think. 2 weeks, 3 weeks of extremely cheerful moves, and then 3 continuous weeks of just the exact opposite, would say actually misery. Right? This is a real roller coaster. This time around, I don't think the 200-day moving average is going to hold, and if it breaks down, then 9,700 on the small cap index is very possible. Okay, all right. So very rarely do we look at this. This is the multi-decade chart for the Sensex, and what's interesting is that it is really coming to a potentially very important support level on the green trend line. And just to uh, put context for those who haven't seen this earlier, the green trend line, according to me, represents modern India, or new economic growth, especially after the reform started in the late or mid 1990s, and also once the FI started to pour money into India in 2000, 2001. And if we take that, and we're all again talking about higher, sustainable GDP growth around 8.5%. So in my view, this, green line somewhere, I guess there about 26,000, so another 1,000 points fall, or even 25,000, fine with me. What it should not do is break below 21,000. So we could still fall 8,000 points. That's almost what are we talking about? On 30,000. About 20-25%, and we would still be in a multi-decade secular bull market. Okay, so again, getting perspective on how these things behave. All right. Okay, so there we have it. So no sectors which are bullish. Some have very nice head and shoulder tops. No bullish sectors. Even the leaders last several months and years are now weak. Pharma, IT, to some extent, capital goods. Okay, right. And actually, really good. I think we should archive this and put it under. Want to see head and shoulder tops and topping patterns, and these are some excellent ones. So in case, of course, did not know this at the beginning of the session, but if you want to ever revise, then just the first 20-25 minutes of the first May 2015 um, video will show you some excellent head and shoulder tops that took months to form. Right? Uh, Measuring implication is the height of the head. So based on how much that is, you can expect the fall to happen by that much after the neckline is broken. Yeah.
We are the only ones on the call, huh?
Yeah.
Okay. I calculated that and it came to around 7.5 something. So I want to know if it is right.
On the Nifty, yeah, it is.
Because
I mean, it depends on what levels you took, candlesticks or Dow Theory, but yes, 7.5 before that around it.
I calculated the candlesticks and like the top of the topmost candlestick.
Yeah, that's going to be a little aggressive, but 7.5 is distinctly possible. I would say 7.7 if you just take closing prices and then take it from there. So if you just took, the Nifty, this is a candlestick, but if you made this a line chart, then it would look slightly different because the levels will fit differently, right? So that high is not that high, and then you perhaps put a different level. But all said and done, I think 7.7 was my initial thing. On closer thing, I'm closer in analysis. Might even say 8,000 first, and then 7.7, and then 7.5. Right, so if I was looking purely,
8,000.
yeah. So this is the height,
Yeah.
right? So
Yeah, that's like a fractal actually.
yeah, it is. So 7.8 and then 7.5 or 7.4, 7.460. That's fine. So I think most definitely headed down there. All right. So it looks like get out of longs and go fish, or rather go short. Right. That's the theme. As a matter of fact, that was the theme a week back. We didn't do last week's IMR. Remember that. So yeah, that's it. So we look for more and more bad news. Any good news? If the markets don't respond to that positively, we'll give you a suggestion of how weak the sentiment probably is underlying all this bearishness. Okay, so we'll sort of quickly go through the Nifty stocks. This is a time when you don't have much choice. When the bear market comes, the only way to make money, as we all know, is shorting, and then you can do that more or less only in the FNO stocks. So you're restricted to those 140 stocks, and really no point looking outside that group as far as trading is concerned. Having said that, there would be others which are really good companies, excellent stock setups, patterns and all, which would be great to buy once the fall gets over, a base forms, and from there you'd get multi-percent returns. So this is the time to be patient, be doing lots and lots of quick homework, having your watch list ready as far as the long guys are going, spot portfolios and just just be patient. Yeah, and there's also the proverb in the stock market: sell in May and go away. Right, so May has come and the selling has started, maybe a tad bit early. Okay, so if you're looking at alphabetical order ACC, so you can see quite a big fall, 1750 to 1450, and on Friday itself it fell by $50. That's almost 3%. Volumes are higher, indicators are weaker, and there was the, I would say, head and shoulder there. Okay. That would be the head and shoulder. Left shoulder, head, right shoulder, and that whole measuring implication was about what, 200 points. And well, from the place it went 1570, talking about 1370, we are more or less there, another $40 lower, and we'll be there. Probably go even lower than that, maybe 1350, even all the way to, yeah, 1350 is what I would watch out for. And then if 1320 breaks, then even 1200 on ACC is distinctly possible. Look at Ambuja, more or less the same picture. So I think this session will be spent a lot of time just cleaning old studies which did not pan out, and there is probably the head and shoulder top, right? So very small left shoulder, or even including this head, or head and shoulder inside a head and shoulder, right? I would say more or less target met about 285 to 245, $40. So from there, about 205. Oh, we're far away from that, huh? Sorry, I take that back. 285, 245, 40 rupees. So 205, and as a matter of fact, the bounce that happened on Thursday, Friday, excellent. Again, look at how the 200-day moving average is providing some excellent support, but I think things are going to get worse before they get better. Again, the MACD nicely just swinging down, gone below the zero midpoint level, and really not much strength in it. Bounces should be used to short it, especially if it comes around 250. Okay, and then we watch, of course, how the 200-day moving average holds or doesn't hold. While we are at it, so we'll finish Ultratech. So Ultratech also broken down clearly. And this one is showing even more weakness than Ambuja. 200-day moving average acting as a very, very strong resistance, as you can see, right? Market unable to really go up there. And when it goes to 2800, upper shadow, long upper shadow, gets beaten down. So it gives you a sense of how strong the bulls are, sorry, the bears are. And let's say here, if you look at it, high volume fall. Then here last 1 week or the beginning of the week, another high volume fall. Uh, if I had to short, I think there is more weakness in Ambuja and ACC. There's some support happening there along with the MACD sort of basing out um, there. So that's something to keep in mind. And oh yes, oh yes, oh yes, oh yes. Maybe we do, maybe we don't. 32.5. I was wondering whether there was a sort of divergence there, bullish divergence. Not really, but the RSI fall is again not as strong or in proportion to the way the charts look. So there is some hint of strength at lower levels, but on Ultratech, but it were to wait and watch. Asian Paints. So up trend line from May June last year, clearly broken, went sideways, sort of made an attempt to go back up, but no. Very interesting. Saucer formation on the volume, not so much on the price. It went sideways, rectangle you could say, and then it broke down. And on the breakdown, you're actually seeing increasing volume in the last 2 weeks. So this increasing volume in the last 2 weeks is something to keep a note of. And yeah, so keep a note of this in the and watch for this 200-day moving average and how that pans out. Any move to 800 on Asian Paint should be used to short with a nice stop loss around 818, and once 730 breaks, then 700, and then even 675 is a very real possibility. Axis Bank. So Axis Bank came out with some really impressive results. The market was definitely happy. So I think on account of that we had this up move, but Friday's up move again thwarted a bit, though as of now one would hesitate to short this with the long upper shadow, maybe just profit booking. But all said and done, I think what you saw in Bank Nifty and PSU banks, unless of course individual stocks could do very well on the long side, but I think this is the time to be considering being short. So any move up on Axis Bank could possibly be used to sell it, and if and when this corrects more, then be an excellent place to buy it at lower levels. Bajaj Auto. So Bajaj Auto took a bounce at 2000 psychological mark, went to that resistance. Just watch it again. Technical analysis in action. You can see all the moving averages have done double, triple, dead crossovers. Some hope happening at these lower levels with long lower shadows. There is definitely a hint of strength here. And if we look at weekly, really there is no strength as of now except the MACD narrowing and slowing down. But if we look at the daily, then you would be forced to consider some of these things. So let me just draw them. This is clearly at this time a bullish divergence, but you always need to keep price action in mind until such time that price action doesn't confirm a buy, you do not buy it. So this is a high risk trade either way, long or short, and some of us may prefer to stay out of it because you're seeing, longer lower shadows in the last 1 week plus a bullish divergence, but that doesn't mean the stock is going to go up immediately. Looks like results came out on Thursday, huge volume that day. But according to me, that volume multiples of what it has been last few weeks. It doesn't really, in the sense of proportion, do much to move the price. So the market would have slept over this over the last 3 days, and rather this one day. And when we open on Monday, today we are on Friday, you could see the impact of that news event result, whatever it was on Thursday, on Bajaj Auto. Okay, Bank of Baroda going sideways at that 171 mark. Tough to say what's going to happen, but after making a sort of, not exactly, but sort of double top 2010, 2014 to, sorry, 2015, it's clearly decided to, I would say, sort of take a break. But tough to write off banking stocks in India just like that. It is at a sort of support zone there. Okay, and once that support zone breaks, then we might see this come to much lower levels, and those lower levels on Bank of Baroda would be somewhere there at about 140. So you're talking about 170 now, 140, 30 rupees. You're talking about a good 20% fall on Bank of Baroda. Right? And if you're going short, then really good stop. I mean, there's a whole bunch of them here, all the moving averages and all. But 180, 185, definitely very, very good stop losses. Bharti Airtel. Okay. So, well, that was the other thing, news. I think that should be added. Revenues for these companies will come down. All telcos, telecom companies reduced. What is that called? Roaming, both for calls and SMS. Right. So some of them are reduced by 50%, some of the 75%. So not sure it's going to take a huge hit, but not sure how many people are on roaming. That's why I can't comment. But that won't be too much in my opinion, and brings it to this one plan, one country, or rather one country, one plan fixed, whether you're calling Kanyakumari or Shillong or Jammu and Kashmir or Gujarat or somewhere closer. Same price. So we may get there. I think if I'm not wrong, sort of American model, right? Or anywhere in the country, same price almost. Okay, sorry, Bharti. So where could Bharti go? Sort of big volatility. 400 is a big resistance, but if that breaks, then 370 breaks, then 360, 355 is a very distinct possibility. So I would say 392, 395 is a very good resistance for Bharti, and then after that lower levels. BHEL distinctly taking some support at that 230, 235 level, showed some strength, and one should check if the result came out yesterday or something, big volume, and went up on big volume. On top of that, you had strength on the RSI, MACD, and all. So that hint was always there. Having said that, though this Thursday candle and big volumes are definitely encouraging, I would say one should wait till it crosses 250 convincingly, given the overall market weakness. Or BHL could be a good buy at as and when the markets sort of settle down at some lower level of them support level. So above 250 is where you could look at buying it. Till then, multiple resistances there: the 50-day, 100-day, 200-day moving average. Coming down, if it does, to around 225, that would also be, I think, a really good level to watch out for, right? Okay. All right. Then we have BPCL. BPCL rounding top looks like. If you go and look at the pharma index, looks suspiciously the same. I'm talking about the last part where you had the spurt in moves and then stayed there for a week or two. In this case, 3-4 weeks, and then you're seeing it come down. And we came down here, volumes increased, and a little bit, I would say, on the higher side. Maybe this was the results day, but remember, with this news yesterday about oil subsidy not having to be shared by the companies, that is definitely good news. So this has gone to 780, 790, and yeah, should come down to the 700 or lower. Okay, so that is BPCL. I would say so. Event risk there on Monday, so that's why no call on this. If the oil marketing companies do not react positively to the no subsidy sharing decision, then any move till 800, 810 can be used to short it, and once it's below 740, then 700 and 690 are distinct good possibilities. Okay, in India, so that seems to be forming a base. As we know, oil prices, petrol and diesel fuel prices were increased yesterday night. Big increase actually, 2 rupees something on diesel and 4 rupees something on petrol. That's a big increase after price going down for many months. And whether that's going to again cause inflation to go up or something is something we'll have to watch out for. Okay, so at this point, I would say, so one of the reasons all this price went up is crude oil prices increased, and things like Cain, ONGC, Oil India are all positively impacted by that. So you've got bullish divergence on weekly charts for Cain, MACD positive crossover, so Cain, and maybe some of the other, we'll check on that right away, could be potential buys at lower levels. So at around 215, 230, definitely at the lows around 200, 208, one might want to pick up Cain India. It's definitely not a shorting opportunity. Having said that, remember, don't expect swift up moves or multi-bagger type moves. All these moving average resistances are there on right on top, especially the long-term ones, and you can get a more sustainable move only after that. So any move till maybe 225, 230, profit booking would come. There will be a few more legs down before this becomes an established support, and after which we see a big rise. Cipla. Oh, let's finish ONGC. So there you have it. ONGC. This is weekly. Let's look at daily. So if you look at ONGC, you can see it's come to a very important support level, and it could easily break down from here. It's come from 460 to 310. That's a big fall. And we had mentioned again, if you go back to a few months back, crude oil prices cooling off is not good. But the event risk, just watch out for this on Monday. And if this doesn't go up after that, then it's definitely a shorting opportunity, especially if 300 breaks, in which case one should look at the 300 put for ONGC for March, for May, and take it from there. Just 1 second. Okay, so ONGC, the 300 put for May might actually end up making a lot of money. So just watch out for that and decide whether we want to do the short only on Monday after this oil subsidy thing has been ruled out of the news and factored into the price. You're looking at Kane. Look at Cipla. So Cipla cleared double top at around 745 in late Feb or mid Feb, and then again late March, a good month apart. And well, no decrease in volume as such, or actually maybe a slight increase in volume in the middle of April, and then again there's a spike which happened. It's taken Cipla and broken many of the supports. Took support at this level of 625. Whether it can hold that is the moot question. You've got the 200-day moving average just below that, so you can see one common theme in this uh, IMR seems to be either stocks that have broken long-term moving averages, or stocks at many of the ones we've seen so far are at the 200-day moving average, and they could be, and there are some others at the 100-day moving average, and they're just pivoting around that, and it's a question of whether those will hold or break down. And the more they break across the market, the more the bearishness is going to be. Okay, all right. So that is Cipla. Coal India, so gone. It looks like the government did a fantastic job a few months back of doing that OFS. They got the money, and now the market is correcting. Okay, and let's see. So 370 breaking down, we've come to 360, and then if that breaks down, then 340 is a distinct possibility. But there are many layers of support zones here, and it'll be a little tricky to trade this. But again, increasing volumes a little bit on Thursday, suggesting that more downside is possible, and we are just at the 200-day moving average, as you can see. It's just there. Look, support there, might bounce back if there's anything to 370, 375, but it should probably go back to 355 and then 345 and then even 340. Then DLF, so came from 165 to 125, 40 bucks in one straight line over 1, 2, 3 weeks. Remember, we were talking about those trend lines there, and once they got broken, then the importance of that. Really no strength on that even now. Short-term bounce, that's for sure, but this bounce on DLF didn't happen with any exceptional volume, just a little bit up, more a psychological mark, I think 125, and it's come back to its 22-year low. Question is whether now this gets broken or not. There's some court case going on and some strictures against DLF. I don't know what happened to that, but it is here at around 120, and once this breaks, then who knows, 100 rupees is distinctly possible on DLF. Let's see what happens. Okay. Okay. Hmm. Okay. Dr. Reddy's. So this is also along with Cipla and all big fall. I think the 200-day moving average being here, I should change the color to a brighter one. It's easily coming to 3,200. See how the 50-day took support for some time, for 2-3 days, then broke. Then how the 100-day offered support for 3 days, then it broke. And this is probably coming to 3,200 in my opinion now. So therefore a good shot with a stop loss above 3,400, minimum 3,200, and then after that probably 3.1 and 3.050. Okay. Then GAIL, Gas Authority of India. Hmm. 550. What a massive double top. 2011 and 2014. Look at how important it is to track these sort of things. Came back there and what got a spike there one day or something, and then whew, this is amazing. I'm just wondering whether the volume is there, and there's huge volume at this 500 550 zone. Somebody just dumped the shares, I think, looks like in retrospect, and then after that multi-month downtrend, no sign of support at all on GAIL. There was that, of course, that bounce there again. Notice how the moving averages offered a lot of resistances on its way up, and then you got this engulfing, bearish engulfing, and then it took it down. 370 broke, and yeah, came to 350, and then even to 325. Okay. So, sorry, didn't give my view on GAIL. I would say GAIL is headed to, on a bounce, it could come to about 380, 385, and then it probably get beaten down again to 350, and then much lower levels to 330. Okay. Gold is at a very interesting place, by the way. It is on a 2-year downtrend, as you can see. Okay, from 2013, and it has come to its close to its resistance, and very interestingly there is the 200-day moving average of gold. So the downtrend line plus the 200-day moving average will be really interesting to see if gold is able to break out of that. I wouldn't take any positions in gold till and such time that this thing gets resolved one way or the other. Okay. Grasim. So that's really not showing much news right now, or sorry, much moves right now. Uh, Wondering if something is building up in the company. Double top, 2008 to now 4000. This could be a next big move on Grasim. Should do some good fundamental analysis on this. Uh, oh, Friday big volumes. Mm, Okay. Just thinking. Oh, no comment on this. HCL Tech. So we all know how much the um, IT companies have not been doing well. About 2 weeks back or last weekend, yeah, exactly 1 week back from now, in class when doing Dow Theory, we're talking about rounding tops and rounding bottoms, and this is a classical textbook rounding top. You've got a neckline at least there, so that's about 150 rupee fall. So we're talking about 900 minus 150. We're talking about 750, right? Yeah, 750 rupees as a target on HCL Tech. There is a window here which has sort of been closed, but little in a funny way with this empty red candle. And again, you can see the 200-day moving average is sort of giving so much, support here. But I think once it breaks down, just check for results. Most of the IT company results, big ones, are out, and market's not happy with it. 900, 9, about 913, 915, good stop loss for a for a short. Sorry. Once 850 breaks, then 800, and then 750 is the target. And given that, let's see, 750. Decent support, so just watch out for that. If 750 goes, then 700 I think is what we should look for next. HDFC, another big rounding top, at least from, okay, so let's remove that. Not a very good triangle actually, but you have nice, nice rounding top. So about 1400 to 1250, that's 150 rupees, right? And from there you're talking about 1100 as the target. Again, 200-day moving average acting as a nice support. Let's look at that. And good shot. That time itself was a really good shot. Could go back up. That would be a good stop loss around 1225. Actually, 1250, 1260 would be a much better stop loss. And yeah, so watch out for 1100, and then I think 1050 is also on the cards. HDFC Bank, sideways move if nothing else, broke down, and I think this downward move is now accelerating a bit. Okay. Really no sign of strength, anything on the indicators. Thursday, big volumes, probably headed to 950 at least in my opinion, right? And once it comes to 950, then we'll have to wait and watch. Okay. All right. Stop loss above 1000, good psychological number. The around 1020, any bound should be used to just short this a lot. Hero Motors 2300 taking support, but that's like again the previous life high. Very important one. This is over 2 years, but whether that will hold or not, and if that breaks, then 2000 is something I think one should easily expect. Though at this point, it is definitely looking like it's taking support. Going to be difficult to read that volume chart. Very iffy. So I would say stay away. If nothing else, then you want to basically maybe take the 2300 or the other 2350, 2400 long straddle and just sit tight on this. It's a very small triangle here, not really that useful, perhaps in trading, but worth watching from a academic perspective. So watch for that and how it breaks out, and that might give you a clue as to which side the move is going to happen. But remember, massive resistance is on top, and as of now, one should assume the trend is down. So once 2300 breaks, then look at the next lower level, 2122. Lots of support zones here. It's going to be tough to say where it will come to, but I think 2000 should be um, something one should expect and could easily happen. Hindalco metals, so those are 126, very important level, and that's a multi-year from 2004 onwards, and no sign of strength at all in Hindalco, as you know. uh, I would see of 126 short, right? Okay, so break of that 126 could easily bring it to 110. I would play this through the option route, just buy the whichever option on Hindalco I can. There's a whole month left, new month starting, and then see how that pans out. um, 110, good stop loss at around, I think, 133, 134, even 135, and then we will review. Okay, Hindustan Unilever, so FMCG. Okay. Good support there at around 830, and once this breaks, then 800 or even 775 is a distinct possibility. This one sideways for about 2 3 months, big red weekly candles here, not looking good at all to me. Okay. And looks like 775 is very much on the cards as far as Hindustan Unilever is concerned. ICICI Bank, I think they disclosed some good results. There's been some pick up on that. Very nice move with volumes on when was that? 28th, yeah, 28th, 29th March, and topping off, I would say, maybe actually a good place to short 335. All right, uh, definitely a good place. I would look at putting a stop loss around 340, 345, and then come back to 310. And I'm saying this overall because there is a very weak market which is here, and I think that is really the moot point. The markets, this is the first good long that I have found, but this will also get dragged down with the overall market. And having said that, it should be a good buy when we look at picking it up later. Okay, there was another good buy for later. I don't know. ICICI Bank. Um, Markets bottom out, almost ICICI. Yeah, IDFC declared some good results other day. Pick up in volume also on Thursday. Important support line here from last August, and 200-day moving average right there. But given the overall weakness in the market, this could easily break down, and it should come to 150, 142 if that happens, and that'll be a good buy. Remember, IDFC, the bank coming out, the bank demerger, and all, so that is something you don't want to miss in the second half of this year. IndusInd Bank, okay, there's a double top on IndusInd Bank, very clear at 950, and then lot of selling, big volume selling which started to happen, and I don't think this is the end of it. At least 800, and then maybe even 775 is very much on the cards. All right, so watch out for that. And hmm, good stop loss, I would say, is around 863, 800, then 770, 750, 760 is where you could expect IndusInd Bank to be. So this is IndusInd Bank, like I said, and I think we finished the analysis for that. So that's a short. And then Infosys, that's clearly a short. There's no doubt about that. 200-day moving average just broke like that. No sign of support at lower levels. Um, and from 2.3, it's come to 1.9, and that is well, that's some small time support level at least. But once this goes, then I think real support is at only 1.8, 1.850 levels. So that's something to keep in mind. Any bounce to 2000 or 2050 should be something that one could use as a place to go short on again. And a really good stop loss is above 2050. Okay. Then we have ITC. Wow, again, a series of double tops. Excellent IMR for double tops, rounding tops, head and shoulders. All right, okay. So 310, I think on the way, it's there. Okay. 310, good support. And sorry, what is this level? Yeah, that was the first good support, and if that breaks, then 275, 280 will be what you want to look for next as far as ITC is concerned. Right. Okay. Any bounce again on ITC should be used to go short on it. Could bounce all the way to about 335, but probably go down after that. Then Jindal Steel. Oh, red candle, empty red nevertheless, but still. Right, so I think we are headed here. So that is 128. We are at 139. That's 10 rupees down. 10 rupees down on a 130 rupee stock. You're talking about 7-8%. And that's, I think, most happening, definitely happening. And if that happens, then we could even be looking at 107 on this stock, which is, whoa, that is really bad. It was 800 rupees. I so well remember this sideways 1 year pattern, very frustrating, 1.5 years, and then broke down this resistance and then just down, down, down after that. Okay. Okay. Kotak Bank. Not bad. This is still holding on quite nicely to its levels. Now going sideways for 1, 2, 3, 4 months. I would buy the 1250 put or the 1300 put on Kotak Bank and just sit tight and see what happens. So the ING merger and all is over. You can see the new boards which talk about Kotak and ING, and after some time that ING part is going to go away. It will become only Kotak. So this is big, and can't call it that yet, but this could be a very, given that we've seen so many rounding top formations, a very unconventional head and shoulder. Your left shoulder, that's a head, or right shoulder. Once that goes, or even if you just talk about this as a rectangle, you're talking about something which is about 200 rupees, almost 150. And if that breaks, you're talking about 1100 at least on the Kotak Bank stock. So watch out for that. Right. So first of all, the trend line has been broken. It's clearly in a sideways move now. Very quiet. It's gone silent, no doubt about it. You can see the shift in RSI and MACD also to lower zones. So be prepared for, could take maybe a month or two for that to pan out. One other thing I think excellent in this class is getting a sense of time frames and how long things take to sort of evolve, develop, and all that. All right. Then we have LNT. So that made a new life high, but well, this could be a very not good, but that would be the neckline for the head and shoulder top, which it has clearly broken. And if it did that on volumes, which I think it looks like it did, then we are seeing it go down below 1600 to easily 1500. When 1500 goes, this height itself is, by the way, from 1850 to 16, so that's 150 rupees. And 150 breakdown from there, we're talking about, yeah, 1500, at least 1500, and then all the way perhaps to 1300 also. Lupin, see, this whole thing comes back to old, sort of relatively important life high, takes support there, so went from 22 to 17 in just a matter of 2 weeks. But again, this move up, low volumes, watch out. Any bounce to maybe 1850, 1900, I would think about using that to short it, not to go um, long on it. And if 1700 breaks, as it goes up, you might want to buy the 1700 put on Lupin, and that could make you a lot of money, especially if it goes down to 1500. It's a nice psychological level, plus the 200-day moving average also is sitting very much there. Then you have M&M, and on M&M you've got the breakdown on the triangle, symmetrical triangle breakdown. Okay, so the base here, really big one. Even if you want to be conservative, just take it from there. We're talking about 1345 to 1120, right? So that's 225 rupees. Let's say the breakdown happened here at 1215. So 990. Whoa, there we go. 990 is the target on M&M. Whoa, 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 whoa. M&M symmetrical triangle breakdown. The target. All right. Yep. All right. Very compelling trade this would be, right? So something that you want to hmm, take a really good. Remember, this took 3 months. My thoughts all over the place. 3 months to evolve. Even if it takes 3 months to go down, and and given again monsoon's not good, SUV sales will drop. Quite a bit happen in the rural areas, plus tractor sales. So this could, and this is a whole complex on which there's a lot of what do you say, support zones in that level. So okay, Maruti announced some really good results. Big spike in volumes. Finally broke through that level of 3,750, broke out, but a little skeptical I am. 4,000 could be a psychological mark, but as it goes higher, I would look at buying a little out at the money or out of the money puts. I think with the rest of the market going down, this should also move down eventually. Okay, NMDC, wow, 125, really nice support. I have to note this down. NMDC 125, nice support, could crack to 110 easily, and play that with a put, and you're going to make a lot of money. NTPC, I'll give it a pass for this. I think we've got much better ones. ONGC we discussed. PNB, yeah. Punjab National Bank. So 220 to 170 quickly, and then it is at that level of 158. Hmm. 158 break, quickly go to 140, and then after that much lower. So PNB also at a nice multi-year support, which if it breaks then would fall. Power grid, ooh, broke down completely. Right, trend line breakdown. There's a 200-day moving average. If 140 breaks, then easily 135, and you've got a stop loss here at about 146, 148. Reliance Industries. So there was a big move here, 900 to 950, and there's a lot of talk about how Reliance Industries could lead the market now, for at least one of the leaders of the market, the new leader rather. But well, I think we'll have to wait and watch the results or whatever this was. Wasn't market wasn't too happy with this. Whatever that was, not sure. Okay. So went up, and then yeah, I think that must have been the result, and it's come back to a support level of around 850, and just to better to wait and watch as to what happens at that level. Okay, we did the Nifty, State Bank of India. So SBI is sitting again at 200-day moving average, sitting right there. All right, and then once this breaks down at 270, we're looking at it going to 255 or even 250. I think easily is something we can expect on this. Wonder what will happen with the rights issue they are planning because they'll have to sell it at a lower price. The government, they may not be too happy with that. Okay. Okay. SSLT. Bowl. Really interesting. This is not expected at all. Uh, Actually showing strength. This thing. And SSLT might actually be a good buy. Oh, I think I'm wondering if this is getting updated because the new name is Vedanta. So I need to check. SSLT got renamed, but right now it's looking good. Uh, you're not. It's not the typical. What is this? 1 second. Candlesticks. Yeah. Right. Yeah. So watch out. SSLT might actually be a buy, especially if it breaks out of 215. It should definitely not be shorted, and it should be on your possible buy list. Sun Pharma. So Mukesh Ambani gets the title back as India's richest man from Singvi, and you've got this big window, huge it is. Make it a little bigger. All right, and it'll be a task for it to actually move back there right now. 920 lifetime level, 1200 to 920 very quickly. The Daiichi buggers were really smart, sold it off at those levels, right? And then it is full almost 10% cheaper now. 920 goes, then 870, and then who knows? This is the level to then watch out for. I would say around 850. I would say, yeah. Okay, watch out for that. And then if that goes, then 750. I think most definitely on the cards. Also, the 200-day moving average would have been broken. Tata Motors, so that's also breaking down now. 500, 200-day moving average is broken. 500 gone. Looks like 470 is going to come quite quickly. Let's extend this and see what happens at this level in the future. Okay, so it should come there to about 470. Could buy the 500 put on Tata Motors and then just wait and watch. Big volume on Thursday, so beginning to fall on high volumes also now. Tata Power. Hmm. So move false breakout almost middle of last year, one could say, though it was on very good volumes. Actually, that's a wrong term. I should take that back. It's not a false breakout. It was a genuine breakout. But things didn't really pan out, and looks like this one is going to 70, and 75, 77 is a good resistance at this point, and if it goes there, you want to short. Tata Steel. So falling wedge broke out, right? Went up on slightly higher volumes. You talked about this MACD, RSI. You can see it in weekly charts also, but then went to the 50-day moving average, and you can see how that offered quite a bit of uh, resistance there. And then 400 would have been fantastic resistance, and it has turned down from there. So good volumes turning down a little poor volumes, but still I would be circumspect. I would say don't short this, but I would put it on around with SSLT. I would put Tata Steel on the list of possible buys when the market stabilizes. TCS. So we had looked at this 1 week back. It's still not broken that. Very tentative. It's sitting there. It's a very important level. Uh, and again, it's below the 200-day moving average, so that's one thing. And if this breaks, it's done that from last August with the sort of breakdown here with a big gap and recovered. And if that breaks and 2350 goes, then 2250, right? So TCS, watch. Multi-month support. If breaks, then all right. Then Tech Mahindra, oops, to fix that data problem. Ultratech we discussed. Wipro, so big fall, window closed, and then Wipro, nice rounding top, measuring implication very clearly met. So from 670 to 530, volumes increasing. and then we are now facing resistance at 540, right? And if that goes, or rather that resistance holds, and I think it will, then 500 on Wipro is coming, no doubt about it. 500 is coming. And then lastly, Z Limited, as you can see, double top. That's the theme of this IMR. Markets have so dramatically changed in the last 2 weeks. You're looking at so much strength, and now we're looking at so much weakness across the board, across sectors. 300 at least on Z Limited, right? Yeah, good stop loss around 325, but 300 is most definitely coming. And if once 300 comes, then 280, 260 is also something you should not rule out. All right, yeah, okay. So that's it for this IMR. Plenty of rounding tops, head and shoulders, double tops, rounding tops, and quite a few stocks at some really good support levels which are there, and some excellent shorting opportunities are there in this market. So I think as we close, then can only make this comment. Excellent IMR showing plethora topping patterns. Right, so whether we look at head and shoulder tops, rounding tops, and double tops with plenty of stocks at some very important multi-month supports, which if broken would take stocks down by 5 to 20%. Nice place, time to buy puts and enjoy the profits, and of course just get out of your longs. All right, so that's the summary of the session, and that's where we close. So thank you for watching, thank you for um, participating, and hope you have a good week ahead. Make sure you protect your portfolios and go short.